So, if you've been checking your crypto portfolio this week and just like scratching your head, you are definitely not alone.
Oh yeah. It's been a very confusing week for a lot of people.
Right. I mean, logic dictates that since the NASDAQ and traditional tech stocks are up, what, more than 4%, crypto should be flying. But instead, it's just sinking.
Yeah, that divergence is it's really the big story right now.
Exactly. So today we're doing a deep dive into the Vantage Plus weekly crypto analysis for Monday, April 6th, 2026. And, our mission today is basically uncovering this massive invisible leak in the crypto bucket.
The leaky bucket analogy is perfect here
Hmm.
because, on one hand we have institutional buyers and these massive Wall Street ETFs accumulating Bitcoin at near record levels.
Right, which sounds great on paper.
Exactly. They are pouring immense capital in, but the overall price is still dropping.
Wait, I have to challenge the math on that though. Like if BlackRock and these massive ETFs are buying billions, how can anyone possibly outsell them?
You'd really think Wall Street would dictate the price entirely.
Yeah, I mean the volume just doesn't seem to add up.
Well, the on-chain data shows us exactly who is secretly opening the drain valve. It's the whales and the miners.
The whales, like the early adopters.
Right. Specifically, wallets holding between 1 and 10,000 Bitcoin. It's like trying to fill a swimming pool with a fire hose.
Which is the ETF demand.
Exactly. While someone at the bottom of the pool has just completely opened the main drain.
Wow. So the surface looks calm, but the water level is quietly dropping.
Yeah, their aggressive profit-taking is just entirely overwhelming that Wall Street inflow.
That's a huge realization because retail investors are probably tracking those ETF inflows and assuming it's this massive bullish signal.
Oh, they definitely are. And they're totally missing the invisible whale wallets just, quietly exiting out the back door.
Which makes relying purely on institutional news right now pretty dangerous, I guess.
Extremely dangerous.
So, does that explain why Bitcoin is just like drifting sideways right now? Because it's hovering around what, $67,073?
Yes, exactly.
Usually I look at a sideways chart and think, the market's just taking a breather to gather momentum.
I get why you'd think that, but actually, in a climate of heavy profit-taking, sideways movement is a total trap.
Really? How so?
Well, the longer it drifts without upward momentum, the more the odds increase for a downward slide. And right now, it's testing a major support zone at $65,000.
So what actually happens if it breaks 65,000? Like we always hear about support levels breaking, but what is the actual, physical mechanism there?
It's basically all about algorithmic trading and stop losses.
Okay, so bots.
Right. A support level isn't like a physical floor. It's an invisible line where thousands of automated bots are programmed to sell if the price drops even a penny below it.
Oh, wow. So if Bitcoin breaks 65,000.
It triggers a cascade of those automated liquidations, which could crash the price all the way down to the $55,000 range.
That is a massive drop. And since the whole ecosystem is tied together, I assume that Bitcoin drain valve is sucking the liquidity right out of Ethereum, too.
Oh, absolutely. I mean, ETH is currently sitting at $2,048, and it's completely trapped under its 50-day moving average.
So what is the actual panic number for ETH then?
The real panic number to watch is 1946.
1946. Why that specific level?
Because it tried to rally past that last month, got capped by selling pressure, and failed. If ETH drops below 1946, it breaches the 2-month low.
And that signals the bots again.
Exactly. It tells the algorithmic traders that buyers have exhausted their capital, which accelerates a much steeper sell-off.
Okay, so if the two heavyweights are like one algorithm trigger away from a slide, I assume the altcoins aren't acting as safe havens.
No, not at all. It's a full-blown contagion. Just look at XRP.
Right, XRP is at like $1.30 right now.
$1.30?
Yeah.
And roughly 6 cents, yeah. And for 7 months, it's hit an invisible ceiling. Every time it rallies, it hits that same 50 moving average and gets aggressively sold off.
Because those same trading bots are programmed to take profits the second it hits it. It's just a self-fulfilling prophecy.
You've got it. And XRP just lost its $1.35 support. If it slips under $1.30, the sell-off really accelerates.
Man. What about Solana? I know a lot of people hold SOL.
Solana is in the exact same precarious position. It's capped just under $100, currently sitting around $79.82.
So right on the edge of the high 70s.
Yeah. And if SOL breaks at $78 zone, it triggers another wave of selling. The next structural floor isn't until $60.
Wait, $60? That's a level we haven't seen since what, November 2023.
Precisely. It's a long way down.
So if you're listening and watching these charts, you really have to realize that crypto prices right now are locked in this vicious tug of war.
A very fragile tug of war.
Right. You've got institutional fire hoses pumping cash in and whale drain valves dumping it out, and it's leaving every major coin teetering on these like algorithmic tripwires.
It really entirely changes how you look at the current market stability.
It really does. Which leaves us with a pretty terrifying question to ponder.
Ooh, what's that?
Well, if massive ETF demand is the only force keeping these support levels intact right now, what happens to those automated tripwires if the institutional buyers decide to take a long weekend, but the whales keep dumping? Think about that next time you check your portfolio.